guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
going on, snipers? Thanks everyone for joining. Good evening. We're gonna get started in a couple minutes. We're gonna go through today's top news, top-down analysis on gold, daily, 4-hour, hourly, and bring it down to the 5 minutes, and we'll see what's going on for Tokyo in the future session. We're gonna go till 8:30, and then we're gonna wrap it up. And tomorrow is gonna be our final session this week. Okay, guys. So let's see what these markets give us. Trade smart, risk management, and let's have a good session.
Hey guys, good morning, welcome to the live session of Stocks Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Hey, welcome everyone. Welcome, guys. Thanks for joining Stock Sniper Trading. Welcome. My name is Ron. My partner is Dave, guys. Just got to get set up here, guys. I got to hit the record button, so just one moment. Let me just get situated here, and we'll get going.
Recording in progress.
Okay, guys. Thanks everyone for joining. Welcome, guys. What we're gonna do is carry off from yesterday. We're gonna go to look at today's news and get into. Let me just turn this one light off. I got this one light and it's really, really bright here. 1 second. Okay, it was right in my face. It was really bright over here. Okay, where are we at? Okay, guys. So we're gonna do gold. We're gonna get right now. This is how it's moving on the 5 minutes. We're gonna get it down to top down. And but first, let's just go over the news. Today we had some news in the markets. A lot of British news coming out of Europe, and we moved into the North American session. Yesterday was the high impact news. We had a lot drop yesterday. All the retail sales, the NFP. Today was a lighter day. No high impact news in North America. We had the crude oil inventories. If some of you guys are trading oil, it hit a bottom. There was a little bit of a bounce to the upside, but it could further go down. And now we got to see if crude oil starts building a little bit of support at these levels around $55 to $58. See if it can build a little bit there and start to trade into the 60s. However, there could be one more push down right to that psychological $50 point, and we'll see what will happen down there. Okay. And later tonight, after our call, we're going to wrap it up at 8:30, and scheduled around 9 p.m. Eastern tonight, President Trump is set to speak. I have no idea what this is regarding, but anytime Trump is speaking, he could say something about the financial markets, and it could be volatile at this time or tomorrow. So just keep an eye on that if you're trading later tonight. Okay. Earnings. There was some earnings. Micron in the after hours, they had really good earnings today. You can see that Micron is a technology company over here, so involved with AI and chips, and had a good earnings. You can see the EPS, earnings per share, $3.89, and the actual report came out really good, $4.78. That's a big beat on the earnings per share. Also a very good beat on the revenue. So this is quarter over quarter revenue. It was estimated at 12.54 billion, and they exceeded that. 13.64 billion. Growth really good, almost 57%. big surprise, 23%, all green, and guidance was very good, leading in with the check mark with the arrow going up. Okay. However, they're down 3% in the after hours, so it was great earnings. But we'll see how the market was a red day. We'll see how they take this tomorrow. Maybe this could lift the tech markets tomorrow and maybe have a bullish day in the indices in NASDAQ and S&P 500. However, it could just continue selling, and this was earnings didn't really matter if there is a bear market, right? So this is just one company out of many, but good report, and we'll see if this holds up trading in the pre-market tomorrow and how Wall Street opens up tomorrow morning at 9:30. Okay, and then going into tomorrow morning, some earnings. If you will be trading the New York session, Accenture Limited at 6:40 a.m. And you do have a couple other companies, CarMax, Cintas over here, Fuel Cell Energy. No big names to make mention about or to really affect pre-market trading tomorrow. Okay. In the news, overall news, oil rallies as geopolitical risks mount from Russia to Venezuela. So oil was up 1.7% today. So it was due for a little bit of a rebound. It was selling down to some lower levels, and there's going to be some buyers that step in. But again, is it just going to be like a little bit of a bounce, a little bit of a supporting area, and it's got further room to drop, or is it going to build some support in this area over here? Okay. Just what else is going on in the news? A lot of this news is Canadian news. Some of you guys aren't interested in Canadian news. Stock market today, Dow, S&P 500, NASDAQ futures rise as Micron boosts tech after the sell-off. CPI report looms this week. You can see Micron is trading at -3% right now after a really good earnings. Oracle has been taking a big hit lately. They've been down 20% for the last month. So Oracle is taking a big nosedive. That's kind of what's driving the entire tech sector down, is Oracle as well over here. And it might have further room to continue to drop down. Okay. Some regarding like crude oil, some sanctioned oil vessels divert from Venezuela as Trump threatens a blockade over there. So that's developing news. And that's what we got going on in the markets right now, guys. Okay. Let's get into this over here. And guys, we sent out a few signals over here. This is one on crude oil. I'm just mentioning over here. So there was a crude oil signal along a buy at $56 and just about 10 cents. And you can see we provided like a level. We got some volume closing above, and there's a pattern or like a candlestick that we recognize. Short wick, ignited bottom. There's the pop and the continuation. Again, if you follow that 15-minute candle, it closed about 99% near the high with a short wick. Again, the next bar, 15-minute bar, opened ignited with no pullback into 50%, broke that wick, continued. Look at where it closed. It closed with no wick. We closed 100% near the high. It opened, small pullback, again, shallow pullbacks, all holding above 50%. So if you cut each one of these individual 15-minute candles, they continue to push up right into these wicks and drove all the way up there. This is on a 15-minute time frame, and you can see that it drove for about 65 pips here. So, you know, that could be maybe towards your daily goal. If you need trade signals and charts and ideas, we provide these as well. Okay, guys? And over here is our free Telegram channel. It's pinned at the top of YouTube for you guys. Thank you guys, 100 viewers on YouTube. We appreciate you guys. Some of you guys are clowns on YouTube. I just want to mention that. But what are we going to do? You know, that's the nature of streaming. You're going to get people that support you. You're going to get haters. You're going to get all kinds of people. And you're just going to get some people that are just clowns in general. But it's part of the game. If we come on and stream, you know, sometimes it gets annoying, but we've been here for 6 years. We do this every single day. We've developed a little bit of thick skin here, and we know how to put up with the clowns and the haters. It's all good. The more people that hate, then we know that we're doing something good. So you guys can bring it all on. Bring it on. I challenge you guys to challenge SST, and we'll see who will last longer. Okay, guys, but there is a free Telegram channel for those that want to learn and advance your trading. You guys, it's up to you. Again, we're not going to beg you, but if you guys want, there is a free Telegram channel. It's pinned at the top. This is Dave in the New York sessions with the snipers, doing really well. You can see some remarks from the snipers in the group over here, some remarks from some of you guys on YouTube, and free blogs, free links to join us, and before and afters of our trade recaps and everything we do here at SST. Okay, with the hate and the love, it's all good. Right? With growth comes responsibility. But I hope we're doing something good. I hope, I believe that we're doing something good, providing free financial education in a live environment, showing everything what we do is transparent. And hopefully some of you guys I know are learning. Some of you guys are sending us private messages and showing us that you guys are changing your trading for the better, changing lives. So like I said, if we can change one person's life, we've done our job. If we can do it for 10, 100, thousands, we've exceeded our job. So that's what we're here for. We do put up a lot of shit with you guys, but it's all good. Okay. And this is our website, guys. If you do want to join the team, lots of education. The free blogs are available right over here. So we talked about yesterday about the Santa Claus rally, what it is, specifically what the dates are. So get to know that, because we might be talking about the Santa Claus rally very, very soon. You might be actually trading if they're in that rally as well. Some of you guys need a little bit more help on psychology and mindset in trading, and we offer blogs over here regarding psychology and mindset. So trading is more than just price action, technicals, fundamentals, candlesticks, and charts. There's a lot more to trading that goes that you gotta learn. Okay, and that's when you'll really take your trading to the next level, is when you start to really understand the mindset, the psychology of trading. For me, it's hard, because not only do I have to deal with my own psychology of trading, but I got to deal with clowns on YouTube as well. So it's a lot to juggle over here, because when I'm trading by myself in front of the computers on a daily basis, I don't need to impress anybody. It's just me doing my job, right? But when you come on YouTube, it's part of the game. So if there's any live traders out there, salute to you guys. I respect you guys. I know that you guys got to put up with a lot of shit. I'm not a streamer. I'm a trader. I'm learning how to be a streamer. I've been learning for the past 6 years, but I'm no way perfect. And I'm just want to send a shout out to YouTubers out there. If you want to open up your own little YouTube channel and you want to pre-record videos and upload them, or you want to do live stuff, whether it's trading, whether it's baking cakes, whether it's anything that you want to educate people on or what you do, just know that you're going to put up with a lot of bullshit in the comments and in the chat, and just don't think about it. Just continue doing what you're doing. As long as you're doing something positive and you're helping out, people will understand that. You'll always have some negativity no matter what you do. If it's always going to be hate when you're doing something good. So don't worry about that. Just brush it off and come back strong the next day. Okay. And guys, here it is. Thank you guys so much for liking the videos and subscribing to the channel. We do appreciate you guys. And let's get into this. Okay. So we're going to get on charts. Gold is moving right now. It's still early. It's 6:45 p.m. Eastern. So the futures market doesn't open up till 8 p.m. That's in one more hour and 15 minutes away. This is kind of like the Tokyo channel right now that we're trading through. Markets open up in Australia. They move to New Zealand, then they start moving into Tokyo and China, and then the volume starts moving into Europe, and then finally it starts to come into North America, New York, Toronto, and again, then the day finishes off and we repeat the cycle. For some of you guys, maybe this is your session that you guys trade. Again, get to know how the volume trades at this time. Get to know the security you're trading at this time. Some securities are better to trade than others in this specific time. Like if you're trading currency, I would maybe focus on Japanese yen, New Zealand dollar, Australian dollar, specific to the session, as opposed to trading the euro or the dollar right now, right? And then when you move into Europe, you want to focus on the pound, the euro, and not focus on NZD or AUD. And when we move into North America, then you focus on the American dollar, the Canadian dollar, and know what overlapping sessions are as well, when London overlaps into New York and things like that. Okay. And also, guys, please be aware of your exchanges that open up. So if you're trading gold, we talk about COMEX, know what that is, the commodities exchange. It opens up at 8:20 a.m. Eastern every day, closes at 1:30 p.m. Eastern. If you're trading gold, make sure you're aware of these things, and just get to know your securities that you're trading. You want to know the personality, the behavior, how it trades, what time of day it trades better than other times of the day. And as you just naturally get more experienced in the markets, you're going to figure this out. It's going to just become very routine, okay? And thanks everyone on Zoom for joining. Welcome, guys. Justin, thanks for joining. Wen Moon. I love that name, Wen Moon. I don't know when Moon, but hopefully markets will moon very, very soon. Okay, Wen Moon. Chris, welcome. And guys on YouTube, thanks guys for joining again. We appreciate you guys. Justin, welcome. Sif Webem, I don't know if I pronounced that correctly, but hopefully I did. Welcome, Dustin. Thanks for joining. Prof. Ronnie in the house. Wonder who will be here tonight. Unkrong was not feeling when he left. Yeah, sometimes you sleep it and then you're right back in here. That's how, Dustin, we've lasted 6 years strong on YouTube, is you got to kind of just brush off the negativity and just keep driving, keep coming in. You know, we're not going to let one idiot, one clown spoil it for the rest of you guys, okay? Just a small minority of idiots. It comes with the game, but we respect all of the 99% of you guys that are here tuning in, learning and earning every day. We don't want to disrupt you guys, okay? Jonathan, welcome. Thanks for joining. Jay Violet, thank you for joining. Good morning to you all the way in Australia. Welcome, guys. Okay, and to everyone else, shout outs to you guys. Let's get ready. Let's do our top-down analysis. And if it's your first time learning about a top-down analysis, maybe just pay attention for like 5-10 minutes, see what we're doing. Let me just like break it down. What I'll be doing is I'm starting on the higher time frames daily. Then I'm going to start to figure out some points of interest on the daily. I'm going to start to figure out some points of control on the daily. I'm going to start to figure out some zones on the daily. Once I do that, I'm going to bring it down to either the 4-hour or the 1 hour, right? And then figure out the same thing on the hourly. Figure out some hourly points of interest, figure out some hourly zones, maybe some hourly points of control, and then finally bring it down into the minutes. Specifically, we target 5 minutes on these calls. So I'm going to bring it into the 5 minutes and do the same thing. Look for 5-minute points of interest, 5-minute points of control, 5-minute zones, and trade off of these levels with appropriate risk management and discipline, and with a trading plan, okay? Yesterday, my bad, my apologies. We took a trade. It went into 40 pips of profit. I didn't take out any profit. I didn't take out partials. All I did was I just took my stop loss, my original stop loss. I decreased it. I lowered my risk. And then it came back and hit my stop loss at 15 pips where I left 40 on the table. So I got to try not to do that again tonight. I got to learn from it last night. And hopefully if we get into a trade and it's a profitable one, myself, not you guys do what you guys want, but myself, I'm going to maybe look to lock in some profits. Okay. And just finally, guys, disclaimer, we're not financial advisors here at SST. Dave and I are just here to entertain, educate in a live environment in the financial markets. Everything you do is at your own risk. We do know that some of you guys are gamblers in the markets. If you do, that's on you. But we know that the majority of you guys are learning risk management and you guys are doing really well. So I hope that we continue this, especially now going into the last few weeks of the year, and there's going to be a lot of US bank holidays interrupting the flow of volume. You're going to see markets are closing early on some days. You're going to see a decrease in volume. You're going to start to see spreads and slippage. And so guys, get to know what days are open, your trading days, start making your plan. And if you take time off for the holidays, that's fine. The markets will be here on Monday, January 5th when they open up again, okay? We'll be here Monday and Tuesday of next week, and maybe Monday, Tuesday of the following week, and that's it. That's myself. I'm telling you guys because I'm going to enjoy a little bit of holidays myself, okay? Okay, so let's get into it. Let's start off on the daily. Okay, so hopefully maybe some of you guys have already done your analysis. Maybe some of you guys already have your charts ready to go. But just to reiterate from yesterday, remember what we talked about? This big day right here on Friday, the sellers pushed it down. The next day was bullish again, and then they pushed it right back down. The next day we had Tuesday, a spin top candle came up, back down. And yesterday, remember how bullish it was during our session, and it kept moving up bullish in the futures market, and it still kept going up there. But look at where yesterday's high is. It's relative towards right near all of these wicks. And again, we're opening up strong, so we can maybe fill these wicks and continue to break out. But look at where we're getting very, very close to. We're getting right into that all-time high supply zone. And it's retraced all the way back up there. So that is our all-time high. Just marking it right here. On Forex, it's 4,382 all-time high. I know some of you guys are trading the futures market, and you might see your all-time high is around 4,400 in the futures. Okay, futures and Forex have different numbers, but candlestick patterns, candlestick recognition, price action is pretty similar. Like if you look at the chart side by side on the daily with GC and XAUUSD, it should be very, very similar. Okay, there might be some discrepancies, but altogether it should be very similar. Okay, now that I figured out the all-time high, right? Then I just figure out from the all-time high, I come down to this zone so that I can figure out where the sellers were at the all-time high. When it came up there, they pushed it down. Again, big bullish candle, made the all-time high and closed right there. Then the next day, we didn't produce any new all-time highs. Then we got that big bearish candle coming down. So that's where I identified one zone, and it's obviously supply or resistance or sellers, because that was the peak of the all-time high, and you can see it was having some selling pressure going back down. So what I'm going to do is just move from like a zone to a zone. So you see right there where I have that red zone. I will come back to this in a moment, but let's just follow the sellers. They came all the way down here, then we had a bear flag right there and continued with lower high, lower high, lower high, and then you got a big bearish candle continuing to redistribute. Then finally, we found a point of interest right here on the daily. So this is where I place a yellow line to represent a daily point of interest, and it's around 3,928. And reason being why this is a point of interest, I can see that, yes, this candle broke down all the way down there, but it came back and closed above there. Then you see the bearish candle, there's a body close. Big bullish daily candle open right there. Then it came right back down, right there to that same exact yellow line, and you see how it was bearish. It should technically have been a bearish day breaking down lower, but the buyers right here on November 5th saved it to continue to come up. And this is representing the second leg of this double bottom, and you have that big volume following through. So we found a bottom. We found a pivot. We found a support. We can also find a zone right below it because it's due to this big bullish daily ignited candle on Monday, October the 6th. So when I figure that out now, what you can do is stretch it into the future, and then you can see how this big bearish candle came right into that zone and right back up and held in here again, right back up. So if you extend this, you can see how the second bottom didn't even come in here, and they kept on asking to trade up here and took it all the way up there. So this zone now, let's stretch that into the future. So if gold ever retraces back down to 3,900, that could be a great opportunity to look for a swing buy. Okay, so now we've established two zones. Now with this red zone, let's start stretching this one into the future. So you can see it eventually, after all of these days, from this big drop right over here back in October 21, it took all of the remaining October, took November, moving into December, and finally December 12th, it came right back in. And you guys can't hear me? Can you guys hear me? There's someone on YouTube saying they can't hear me. Am I just talking to myself, or you guys can hear me? You guys can hear me? Okay, all good. For that one person, it's on your end. Everyone else can hear me, okay? So, and then where did I leave off? Okay, so right here, Friday, December 12th, we came transacted right in there, right into 50% of that supply zone. And what was the reaction? Sellers pushed it down. Next day again, we drove right in there. What was the reaction? Sellers are there. They pushed it down. Next day, came in there again. What was the reaction? Sellers were there and they pushed it down. Yesterday now, we closed, again, we came in here and we closed with blue volume inside. So right now, we're still transacting in this big red all-time high supply zone, but we're not too far away from the all-time high, okay? So it could have sellers again push this down, or it could be just buying volume, filling up these wicks and ready to tackle the all-time high, okay? So now I got to look at that highest wick in there and put a yellow line. So 4,353. That's where that resistance is. And if I grab my Fibonacci tool from that red zone, from the entire red zone, from the bottom to the top, look at that yellow line and that wick. It's exactly at 0.5. So that's exactly 50% of this zone. And it's also, if you look to the left of the chart, it's also lined up with the bodies right over here, lined up with those bodies right there. Okay. So if we start to break out of here, we'll have an impulse break, and it's just got this wick and that wick to fill. Then we're at the all-time high. So now maybe it's time to just look above the all-time high. And this is called price discovery. For some of you guys that have never traded into an all-time high, anything above 4,382 is a brand new all-time high. That gold, we can't even go look backwards in the history to see how it transacted or traded up here, because this is obviously the all-time high. It's never traded up here. So what we got to do is we got to base our analysis off of like psychological levels. Okay. So 4,382, what would be the next whole number? I would say 4,400. Okay. So what I do is, again, I use a yellow point of interest right at 4,400. Okay. See how I did that? 4,400, because if it fills a new all-time high from 4,382, it might be like a magnet that wants to drive right up to transact at 4,400. And we should know all about psychological numbers, and could be a lot of transactions there. There could be a lot of sellers there waiting, and it could come right through there. And then there's sellers at 4,400 pushing it right back down. And then we see, we go through the motions again. Will blue volume close above there? Will this previous all-time high turn into support and catch a wick on a pullback and continue to break 4,400? Then when you're moving up, you could go, depending on what style trader you are, you could go by, again, $100 moves. Your next one from 4,400 would be 4,500. And, you could go all the way up there if you like to 4,500. That's a nice psychological number too. Why? Because it cuts 4,000 and 5,000 right in half is 4,500. You could go 44, you could go up 25 points, depending, like if you're an intraday trader, and from 4,400, what you could do is you could draw a line at 4,425, like 25 points. The next one would be 4,450. And then the next one would be 4,475, right? And then all the way to 4,500, okay? And if you're like a scalper like me, like you guys should know, from 4,400 to 4,425, that's a $25 move in gold. That's 250 pips. Some traders are only looking for 50 to 100 pips to hit like daily goals. Then obviously I would go smaller, 4,400. I would go either 4,405, but more specifically, maybe 4,410 and then 4,420, right? And then pinpoint 25, then go to 30 and 40 and so forth, okay? It's kind of like you're doing your own little grid map of where you think the sellers could be at these psychological points, right? And if the buyers can close, like bring it through there and close above there, then the 4,400 would turn into momentarily support. So if it comes back there, holds, then maybe we're going to drive up to the next, point of interest, next zone to zone trading, right? And that's how I go about it anytime I'm trading any securities in an all-time high territory. So you could have done this like with Bitcoin when it was driving through all-time highs, gold, NASDAQ, Dow Jones, and securities that hit all-time highs, okay? And then once we get some volume transacting in there, then we can start to get some concrete evidence, and then we can start to map out and chart things, okay? So I got now, if it goes up to all-time high or breaks here, I got some levels where it could go, but what happens if there's still sellers here that push this move back down? So what we got to do is base off of a few things, okay? And one thing I just always like to educate is on, I get asked a lot, how do you identify point of control? So on all of these calls, I've been identifying this bearish candle because it was a bearish point of control, and I can show you guys how it held up for multiple months, and finally when the buyers broke through it. So quick education on how to figure out which candle to justify as a candle to base a point of control, or you don't want to just do it on any type of candle like these ones. These ones are like insignificant. There's lots of indecision. Anytime you got a big wick above, big wick below, and a small real body, not too much. You want to find these ones, these abnormally large body candles with big volume, and they actually do something. So you can see where it was bullish, it was bearish, it was bullish, and then this one really came down and kind of flushed everything, and it engulfed a lot of bars behind it. So that's a significant one. This one right here, this black one right here, because it preceded this bear flag, and it opened very ignited and closed near the low. That one, that's a good candle to cut in half and figure out the point of control. And if you did that, you'd know exactly where this neckline was. Same with this big bullish candle. This big bullish candle was the second leg coming out. I would cut that one in half and figure out the point of control of that one, and you'd know how it stabilized right in there. So you got to know which candles to do this on. So I just want to teach right now using this candle. How do we do this? Very simple. You grab your Fibonacci tool and you place it at the opening price, and you plot it at the closing price. Very simple. Opening to close. And what I look for is exactly 50%. Cut it in half. The psychological midpoint is right there. I cut it in half with that yellow line. So it's 4,240. How do we find the point of control? Very easy. It's the Fibonacci ratio right above and right below the 0.5. It's either 382 or 618 on your chart. That's it. Very simple. Okay. If you don't even want to use all of these ratios, get rid of the 1, get rid of the 236. You see, I don't use it. I need the 382. I need the 0.5. I need the 618, sorry. I don't need the 786. I don't need 1, and I don't need 1.618 for this specific purpose. And you see how it will just show me exactly where the point of control is. Now we see right there, that's where we verify it, okay? For all those non-believers now that say, oh, this is bullshit, whatever. Okay, so if we did that, which I do this, so I hope you guys are doing this too. We've been doing this for the last 6 years with you guys, showing you guys that this works. It's got high probability, not guaranteed, but if you stretched it into the future, look at what happened. It came, rotated right back up, and what was the reaction when it came right into that point of control off of this big bearish candle, right at 50%, right when it tagged that yellow line? You guys tell me. The sellers were there, they rejected it down, and started this leg coming down. But you see how it built this higher low? Why? Because this big bullish candle held, you know what, 50%. I didn't do the point of control. But it held right there and continued to move back up. It didn't come all the way back down, trade into the green zone. So I know that the depth of market is making a higher low, and it's gaining some support to continue to go back up. So if you stretch this again into the future, look at now. It came and transacted. Look at where it closed on that bullish candle, right at the yellow line. That's telling me right at 50%. Next day it broke out, you know, it was trading near the top, right near the bottom, and look at where it closed, right below the yellow line. And then again, sellers, this is where we had some choppy trading action going into the FOMC. And you see again, big bullish candle coming through there. Sellers were there, still in this red zone, and they pushed it right back down. Right there, the sellers had a great chance to redistribute to back down in here. But you see how the buyers held it up? This big strong bullish candle, opening balance, held up, and it continued to drive right through here. So you can see now we were trading in it, and in this day here, Thursday of last week, it officially closed above this red box now. So whenever I get a candle closing above or below, that's when I change the color of the zone. So now I go from red to green. And now this zone, same zone, is now, if it comes back down in here, we could be looking to be buying at 4,240. We could be looking to buy at 4,210. We could be looking to buy at 4,267 right here, because now this block could be transitioning into pending buy orders and developing some delta positive volume in there. So have we came back into here? No. So what you can do is place an alert. You can either place an alert at the top of the zone, you can place it right at the 50% or right at the bottom, or 3 alerts in that pending box. So you see now what's going on. Now we got maybe a little bit of pattern we can recognize. It came very bullish to the all-time high. It came all the way right back down. That's where it found that double bottom support down in here. Now this whole like kind of wave coming through, you can look at it as coming right into there, and look at what we're doing. We're trading into that, and that's a pattern a lot of us recognize. That could be the start or signal of a double top coming back down, right? And then first thing it wants to do is test this zone. It might just retrace back down there, buyers hold, and then they break it right through. And we got, again, we're targeting each one of these yellow lines, depending on your time frame that you trade. It could come in there again, and then again, triple top. Sellers are there and could break that down. Then we trade back down into here. If that doesn't hold, then we trade back down into here. And that's where the big buyers were previous. They might be there again. Okay. And if the buyers are not here and sellers break it down there, that's where we could start to see gold reverse trend, change character. And then now we got a very bearish trend coming in gold. Okay. But we're all the way trading at the all-time high right now. Okay. So you can look at it also as this wave, where this was one push, wave A or wave 1. This pullback was wave B or 2. This big push to new higher highs was wave C or 3. This pullback right here, which created a new higher low, is wave D or number 4. And then this next move is E or the 5th wave, trading right into the all-time high supply. There could be a squeeze, and it squeezes right through here and extends this rally, but it could very well, trade back down. Okay. But we've got now blue strong volume from yesterday closing above in here. Okay. The previous days it came in and rejected back out, came in, rejected back down, came in and rejected back down. Now we have some buyers closing inside here. Okay. So we have to respect that. Now what I do is let's base a little bit of analysis off of yesterday's candle, because it has closed and we can now start to confirm some information on it. Okay. So first thing is, you see where it opened right here. It was closing off of this spin top. So we got a lot of opening and closing bodies in this area. So what I like to do is just place a point of interest right here, right at like the bottom right here. Okay. Because you see, this was a bullish candle, came up, it was bearish, kind of closed right there. Next day, yesterday, opened strong and continued to fill. And I also look at the number 4,300. So it's a nice psychological number. So if the sellers are respected here in the red box and they start bringing this down, it's a black candle, black candle, black candle, then maybe the buyers again will step in right here at 4,300. If it doesn't hold here, then the sellers will potentially fill these wicks, maybe get it down to here, 4,280, and we see what's happening at the close and opening balance of these bodies, right? And if it can't hold there, it'll fill that wick, and we're transferring right into the green zone where the big buyers could be pending, waiting in here, okay? But we don't have to entertain this or down here currently, because we're trading all the way up here. So one thing is, this candle opened, came through and closed above a particular high, and right there closed. So maybe we just got to cut this candle in half so we can figure out where 50% point of interest is of yesterday's volume. How do we do that? Very simple again. Grab your Fibonacci tool, opening price to the closing price. Okay? Because if it comes down black, maybe we'll find a wick exactly at 50% of yesterday's volume right there. So it would be 4,320. Okay? If you want to draw yourself a little point of control of yesterday's bullish volume, you certainly can do that. That's how you do it right there. Okay. So if in fact sellers are here and they start bringing a black candle down today, maybe we'll find a wick in there. If we don't find a wick in there, then it will be a black candle cutting right through here and coming down to test the opening balance of the body, okay? We see that a lot on the 5 minutes, so this is how you can kind of imagine it on the daily. Now, let's just follow the volume, very bullish, bullish, bullish. It made a high yesterday. You can see the high from yesterday. Look at the number, 4,349, so just below that psychological 4,350. Okay, if we want, we can mark up yesterday's high as a fresh high. It's a yellow line, and it's very close to these previous yellow lines right there. So what I do, just to give me a heads up, is there was a lot of sellers at that yellow line and right there, and also the next day it came in there and it was selling. So kind of just give myself a heads up. It's not a big range from 48 to 53, 50 pip range, $5 range. There's a lot of sellers here. They sold that wick down, they sold that wick down, they sold that wick down. And then when we look at where we closed, so when it sold off of there, it came down and it closed right there. So there was our official closing balance yesterday, 4,338. And I can see we just opened up right there. So that's our opening price. And it was initially bullish, bullish, bullish with this was a blue candle, but already it has an established high. I know it's only 1 hour and 15 minutes into the daily candle, still very early, but it's already been rejected right there. So that's why I place a purple line at the highest point of today's body wick right there. And I can still see it's lower than yesterday, it's lower than Monday, and it's lower than here. And we're still trading below the all-time high orange line right up here, okay? So right now, the sellers have pushed it down and came back to the opening balance. They broke it and they traded right down there where we've already got a low wick already in the market, 4,335, and there's a little bit of buyers bringing it. So we're basically trading right at the opening balance. We have like a doji daily candle. Obviously, this is going to start to fill up with more volume. So if it comes back down bearish to the lowest point of day and starts going black, 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 maybe we reach the bottom of the red zone. So the bottom of the red zone is a point of interest in itself. You can place a point of interest line if you want, but when I'm trading at the bottom or top of my zones, I know how critical they are because it is the point of control using a Fibonacci. So I know the implications myself, but if you have to place a line there, place it, okay? And then if this doesn't hold up, then we know we're trading into the point of control of this candle, and cutting it in half is 50% right there, the 4,320, okay? So if it continues to hold up and come back to the opening balance, maybe it will flip blue, fill this wick, and then we're driving right back up to the highest point of the day. It could continue to break higher. Then we'll see if we can drive right up back to test yesterday's high and maybe create a new high, okay? It might just come up a little bit here and get rejected again and make another lower high and come back down, okay? So that's what we got going on the daily right now. So overall, when you look at the bigger picture, we're trading in a double top all-time high supply, okay? So, it's fair game. Buyers could continue to squeeze this out of there, or sellers could bring this down, okay? So it's in a very, very important area here, okay? So when I now bring it down from daily to the 4 hour, so we can see there was a little bit of a move on the 4 hours, okay? It came up, back down, came up. There's the double top on the 4 hour. And then the 4 hours came down, came down, came down. They couldn't continue to fill that wick and break for a new low. It stopped right there and a big bullish 4 hour candle printed. And look at when it pulled back into 50% of that 4 hour bullish candle, held 50%, the point of control, and it's continuing to come up. But now look at the last few 4 hour candles. Look at how thin the volume is getting. Okay, so you can see how thin the volume is getting. We're trading on thin volume at the second all-time high. So this is fair game for anyone to step in, sellers or buyers on thin volume. So the thin volume was after 10 a.m. to 2 p.m. today. Another thin 4 hour candle was 2 to 6 p.m. That's the closing. And this is our opening 4 hour candle. So you can see thin volume, shitty candles, indecision. All it takes is some big buyers to come in and start to break it through here, or some big sellers come in and start rotating it back down, okay? So we're not getting much information from the last few 4 hour candles. Now when I break it down to the hourly, look at how choppy the hourly candles are trading right now. There was one big bullish one that printed at 8 a.m. yesterday. That was COMEX and all of our 6, 7 US red high impact folders, the retail sales, core retail sales, the NFP data, all of that. So it was really shitty for the US dollar, but really positive for gold. And it's retraced back down, but you see how it's still held, came back up, and now we're just barcoding. It was bullish at noon, bearish at 1 p.m. Indecision at 2 p.m., bullish at 3 p.m., bearish at 4 p.m. And look at, we're just trading on the hourly. So both on the hourly, we see buyers are accumulating and sellers are accumulating. Buyers are accumulating, maybe sellers will bring it right back down. But there's an impulse wick. So as a scalper, you know, on the short 5 minutes, I just want to know where my hourly resistance is. I draw a white line. So it's right there. There's the 1 p.m. wick, the 3 p.m. wick, the 4 p.m. wick. There's a lot of sellers on the hourly sitting at 4,346 and a quarter. I know it's not much, but you got to recognize that they're selling there, they're selling there, they're selling there. And those are all equal highs, and it's lower than that high. So there is a lot of sellers up here, okay? But there's also buyers. From this, when it tapped into the green zone, these wicks are higher low, higher low, higher low, respecting this, higher low, respecting this, and still pushing right back up. So we're in a pennant right now, and the volume is very, very shitty right now, okay? So we gotta now continue to watch. We're gonna go into lower time frames, the 5 minutes. So this is what I got going on the 5 minutes. So I know that what this green zone represents. I know we're trading in this overall massive red zone. I know what that is. That's the second top of the all-time high supply zone. If I look just further up here, there's my all-time high, the orange line, okay? And then remember this red zone that I marked off? That was where those daily candles had all of those wicks in there. So I can see the 5-minute candles came in there and it went right back down. 5-minute candles tapped in there, right back down. 5-minute candles came right in there again, right back down. Now you see that white line that I just placed? That's the hourly. So you see how the hourly resistance is coming down lower. They're offering lower. So it got rejected there. That's a lower high. Got rejected there again at the white line, lower high. Now we're coming right back into it very strong right now, okay? So, and we're just trading at the highest point of the day and the lowest point of the day. If we look at the overall range, you can get your ruler, you can measure it from the purple line to the purple line. It's about a 75 pip range of today's daily low and today's daily high. So maybe we watch, what time is it? 7:18. We watch to see what will happen. This might be a nice big bullish candle that breaks out. Maybe this one might be one that closes above in 2 minutes. Maybe we can cut this one in half, figure out a point of control. Maybe it pulls back. Maybe we can look to attempt to buy off of that and continue to take it higher, or will it get rejected and come back down? Or is it just going to kind of trade, go up, down, go up, come back down, go up, and we're still just trading in this daily high, low purple range, okay? I'm gonna add the daily bar right beside us, and this is our entire daily bar so far, okay? So you see the opening balance right there. When it opened, it had that initial low, came right back up, and we just hit the highest point right there, and this is the volume. So, you know, you gotta let things build. This candle is only not even 90 minutes old on the daily. So we have a lot of time still left on this. And then if we add some indicators in here, the 9 EMA is this green line. We're currently above it. And the 200 EMA is right here below. So if we kind of get a break of the low of the day, maybe it comes down and then we trade right into this 200 EMA, and we'll see if it will catch a little support there. If it breaks, that's why then we got to pay attention to down in here. Okay, guys? So this candle's closing in 30 seconds. See, it came right back up, tested that daily high, and there is some sellers rejecting it right back down, okay? I'm just going to take a look at my spreads right now. Not the greatest volume right now, but we got to work with what the market gives us, right? I'm not a person that makes excuses. You know, some traders make excuses. I don't. The market gives us the volume, and it's up to us to determine whether it's good volume to trade, whether it's volume we got to sit back and watch. It could be consolidating. It could be choppy. It could be tricky to trade. Is there an overall trend? Is it trending? To me, when I look at it overall, it's just in a range. Like if you look at it all overall, it came up, went back down, 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 came up, might go back down. Maybe it breaks out a little bit. Like there's no real solid trend right now. So This volume is not the greatest, but if you know how to pip and dip and get your, like if you bought this leg up, you cashed out, great. You could have sold that leg down too, but you got to be disciplined to cash out too. If you bought this leg coming right back up, you got to be disciplined to, you know, at least bring your stop loss to break even, maybe secure like 80% or cash out because it could come tumbling right back down, right? So you've got to have some sort of rules. You've got to have a rule. Otherwise, you know, if you were in buys and you were holding, you see it kind of came all the way maybe right back down. Maybe you're still in it. You didn't get, you know, you're still got your stop loss down in here. You're still live and now it's coming right back up. Okay. But it's a good range where it's about 50, 60, 70 pips where, you know, if you just bought that leg up, maybe you're well on your way towards your daily goal. But everyone trades different. I'm not here to tell you what to do. But it's everybody's job to determine what is good range volume to trade, what is good trending volume. And right now the market is not trending currently, okay? So did that candle close above the purple high or even break out? No, it came right up to it, equal, right up to the high, and then it got rejected back down. And then the next candle opened right now, bullish, ignited, came back up. Its job, remember what I say, a candle has a job to do. It didn't do its job. It failed to do its job so far. It didn't break that wick and create a new high. And now it's coming right back down, okay? So you can see how they're protecting the daily high right now. Is anyone in a trade right now? Does anyone have any trade open? And it's going to be mixed bias. Some of you guys are going to be buying. I understand why you guys are buying. Some of you guys might be in a sell too. I understand why you guys are in a sell. And some of you guys might be just on the sidelines watching, looking for a good setup. But at least we're learning that this is ranging volume. I hope we're all on the same page that this is ranging volume, okay? And you can see how you have to kind of trade this stuff. As a scalper, you got to kind of be in and out, in and out. Unless you're holding it for a bigger move, that's a different conversation we can have. Okay, so one thing I see is we have not taken out the highest point of the day so far, and we haven't taken out the lowest point of the day. So we know that there's liquidity sitting above here and sitting below. You know, it's not too far off. Maybe we'll see start to, as we get closer to the futures market opening up, it's only about 30, 40 minutes away. Maybe they'll come to transact at the highest point of the day or the lowest point of the day, or it will just continue to just bounce inside here, okay? That's fine. If the market decides to do that, we can either, you can go in a trade, whether you think it's going to sell, you can place your stop loss above, you know, this hourly resistance if you like. If you want to go into a buy, maybe place your stop loss down here. Otherwise, let's just see what's happening. So you see how nice and strong that bullish candle was? It got rejected right at the highest point of the equal high. They pushed it right back down. It came back up bullish, bullish, bullish. But you see how that candle failed to do its job. You and I have a job to do every day. The candles have a job to do every single day. This candle's job was to continue the momentum, and it opened bullish ignited. I don't know if you guys saw that, but I do. I study candles, so I can do this while I'm talking, and you know, because I know what I'm looking at on every single candle. That's how I can do this and continue talking. But I want you guys to start to see this before me even telling you guys. Then I know that you guys are learning your price action. Now look at. Sellers are in full control. This candle is closing in 30 seconds and they've already engulfed the majority of that blue volume. But where will it close? Now you got to watch the final closing price. Okay. And this is a pattern that we recognize. It came up, back down. The neckline is right here. That's kind of like a double top and we're coming right back down. So will they close it with volume below there, come back up and break the lowest point of the day and start dropping it, right? But it could just drop, get a wick and come right back in. So that's why, you know, it's not easy to just see what's going on. But what I like to do is, that was a pretty bearish candle. It did not technically engulf it because look at where it closed. There's still some blue volume. I can cut it in half, right? And now it's continuous selling pressure. But let's see if it's got enough to do something at this lowest point of the day, at this purple line. Or will it just come down here, get a wick, and rotate blue back up? Then we're going to trade into exactly 50% of that bearish candle, okay? And you see we're trading right at the opening balance. Okay, so this is an area where buyers and sellers could come in to protect the opening balance here. And we're still just, like if I was to consolidate this entire purple high and this purple low, this is where the market is consolidating, right? In this entire neutral box that I have here. Oh, thanks, Justin. Guys, please, if you can, leave us a like, subscribe to the channel. We have 262 viewers, which is a lot for a Tokyo session at this time. So we do appreciate you guys. Let's try and maybe get 300 viewers tonight and help continue to grow the channel and extending and paying it forward to other traders who are struggling, maybe want some, live mentorship, some live trading, some live education. Doesn't cost them anything. And that's probably how you guys found us, because it came up in your feed due to others liking and subscribing to the channel. So we want to try and give back to as many people as we can, and we need your help as well. Okay, so you still see now how that opening balance held up. Like it's still holding, and now it's coming right back up blue. So let's see what happens at half of that bearish candle. Will it still continue to hold selling pressure? Is it now getting a little thinner down in here, and sellers could maybe continue to push this thing down? Or is it holding in here? And guys, later next week, this is how you might see volume trading. So those days where we're leading like right into Christmas, after Christmas, leading into New Year's and things like that, you might get some. So that's why I suggest, guys, you got to have at least a date of when you're going to wrap it up this year. Enjoy the holidays, take a break from trading, take a week off, do some review. Because, when you're trading every single day, right, you want to take this time off at the end of the year. And I promise you, January 5th, the markets will open up again, and we'll be right back in the markets. But this is a good time for you to take a break, right? Mentally, you need a break. This is the time to do it. Be with your family. Talk to your family about the stock markets. Talk to your family about the price of gold. Talk to your family about the price of oil. Talk to your family about what you're going to do, what is going to be your goals for 2026 in trading. Hold yourself accountable. Tell your family so that they can hold you up. Tell them, I'm not going to gamble in 2026. I'm going to trade responsibly. I'm going to trade smart. Timmy, you're taking a break next week. New year, we're going strong. Absolutely. I think I'm going to follow your lead, Timmy. I'm just going to do Monday, Tuesday next week, and then maybe the Monday, Tuesday leading into New Year's, and then take a nice break, and we're going to go strong, guys. I'm telling you, when we go strong, you guys got to be ready for 2026. Yeah, and Trump is speaking tonight at 9 p.m., guys. Do not forget that as well. Yeah, Eastern time. Trump is speaking in 90 minutes. He might be a little late because he's got to put his makeup on. He's got to put his orange face on. So plastering on all of that stucco on his face takes a while. It might take him 90 minutes to paint his face orange. Do you guys see that? And then he's got the white around his eyes. Like, what is that? If I was a reporter, like if I was in there in that press conference, my question would be, what the fuck is that on your face? What are you wearing? Like the tanning glasses, Justin? Yeah. The goggles. I've never seen anyone put like orange makeup on their face. He's literally a clown. Oh, he wears goggles in the tanning bed. Yeah, maybe he shouldn't wear goggles because that's a bad look. That's fake news. Yep, it's a hoax. It's a hoax, guys. It's all a hoax. It's just natural glowing skin. I don't like to make fun of like elderly, but I'm going to be 70 and 80 years old eventually, and you're not going to see me. I'll be here streaming with you guys. You're not going to see my face orange. You'll see whatever the hell my face looks like at that age, that's how it's going to look like. Okay, so while the market is just consolidating in here, there was a comment made yesterday about like we monetize off of YouTube. So I just want to show you guys just off of the last couple streams, how much we've made on money-wise on YouTube. So when traders say, Ron, you guys come in here looking to make some money, I'll show you guys. Here's YouTube analytics. If I just go back here, show you, this is our back page. Here's analytics. Okay, if I go to our content, I come to our live sessions. Here is yesterday's session. So if I click on analytics right here, look how much money we made yesterday. Estimated revenue, nothing, zero. Let's look at the day before. Tokyo right here. How much money did we make? Estimated revenue, nothing, zero. Let's look at a big session to give you guys something. So we did, remember FOMC? That FOMC got 7,000 views. 7 times more than these Tokyo sessions. So that should be a big payday, right? Let's take a look at analytics on the FOMC right here. 87 cents. 87 cents, okay? So let me just go back to the charts here. 87 cents. Let me tell you how YouTube works. For some of you guys, if you want to start a YouTube channel, I'll show you guys how it works. 87 cents. YouTube keeps 40% of that. So if I was looking to cash out that 87 cents and go splurge, YouTube would keep 40% of that. So let's just round it 50-50, right? 90 cents, let's cut it in half. SST gets 45 cents of getting 8,000 views on that channel, right? And I was streaming that FOMC from 12 to 3. So that was 3 hours of my time. 45 cents. And now, if we were to take that money out, it has to be registered with the Canada Revenue Agency, where you have to provide information where it's taxed in Canada at a 30% marginal rate. So that 45 cents gets taxed at 30%. So what are we left with? Let's say 30 cents, okay? And I have a partner here at SST with Dave. So we would have to split 30 cents, and I get a whole 15 cents for 3 hours of work. So you want to talk about slave labor? I'm making 5 cents per hour streaming here for you guys. Okay? And let me just put it in perspective. How much 5 cents is. I went to Subway today. Subway, okay, getting a sub. I got 4 subs. 1 for me, 1 for my wife, and my 2 kids. 4 turkey subs, foot-long turkey subs. Nothing special. None of those big sriracha chicken sandwiches. Just turkey subs. Came up to $45, and I'm making 15 cents. So for you guys thinking that we're making millions and millions of dollars on this YouTube channel with almost 100,000 subscribers and almost 5 million views, that's to show you the reality of how much you get paid on YouTube. So yeah, I can't even, what can I buy these days for 5 cents? You guys want me to work for you? If I work for you, I got to charge you at least 15 cents per hour. I got to charge you guys a premium. Okay? So when I say, guys, we're doing this out of our heart to help you guys got to understand. That's what we're here for. We've been doing this for you guys for 6 years on YouTube and just asking for a like and a subscribe. So, you know, when some people make some stupid comments, that's why I get pissed off. And I'm like, well, when I say I don't have to be here, I honestly do not have to be here. I'm not here to make 15 cents, or time is money. 3 hours, I could be scalping the markets myself and make literally $1,000. So I'm here, Dave is here, we're here to help you guys. You know, we set this from day one that we're going to continue to do this, you know, but I want to show you guys that because a lot of people think we're joking. Okay, and look at how the volume is trading. We got nothing going on, right? So this is what the market is presenting us. Yes, we can get into a trade. We could either buy or sell. We could maybe make some move going up or down or going to drawdown. Or we just continue to wait it out and see what's going on. They haven't taken out the lowest point of the day. They haven't taken out the highest point of the day. We're just continuing to consolidate in here. So we're still in a range, okay? Justin, the only way I'll shovel your driveway is if I can afford a snowblower. If I get a snowblower, I'll come. I'm not shoveling driveways no more with a shovel. I almost broke my back the other day and I broke the shovel. No more, not with this Canadian snow that we get. We're actually getting a little more mild. It's warming up over here. The snow is melting. That's a good thing. And guys, just a free blog is available. So, if you weren't with us yesterday, and read what this is, the Santa Claus Rally, Psychology and Mindset. And don't forget, guys, on the Zoom on Friday evening, I've already pre-recorded it. It's 47 minutes and it's going to be uploaded maybe 5 p.m. It's scheduled for 7 p.m., but I'll update you guys in Discord and let you guys know. I'll upload it here and you guys are welcome to watch it over the weekend. And it's kind of like an introduction to psychology and mindset. We're going to do a little series that we're going to release these on Fridays. Okay. So you guys have a little bit of the Fridays where we're not doing anything. Some Fridays we come in and we do Friday New Yorks. It'll be on these type of Fridays when I'm doing Tokyo sessions and then we have nothing available on Friday. So it gives you something to watch over the weekend and continue to learn. Timmy, 40 degrees in Chicago. Yeah, it's nice. It's warming up. Guys, and NFL football Saturdays are starting. Saturday, 4 p.m. and Saturday, 8 p.m. The Saturday evening game is a good game. Green Bay Packers against Chicago Bears. That's a big game. With all the injuries and how the NFL is right now, my prediction is the Buffalo Bills are going to win the Super Bowl. I think Josh Allen is going to turn it on at the right time. The NFL is a mess right now. A lot of teams are shit, or it's going to be one of those years. You guys remember when the New York Giants with Eli Manning, they came in at 8-8. They just squeezed in there and they turned it on right at the right time in the playoffs and won the Super Bowl. You guys remember Seattle Seahawks with Russell Wilson? They were 9-7 and they just squeaked themselves in there and then they turned it on at the right time. It might be one of those years too, where like an 8-8 team, a 9-7 team just squeaks their way into the playoffs and turn it on and they win it because Kansas City is done. Mahomes is out. Dallas Cowboys are eliminated. They're garbage. Baltimore hasn't turned it on. Pittsburgh, the Steelers are off and on. New England, I don't think that they have the juice to do it. I don't think they're a real elite team, in my opinion. And then the NFC, like I got Buffalo Bills. I'm putting them down. And then what else we got going on in NFC? San Fran, Seattle, and LA Rams. But anyone want to take a bet? I'm betting Denver. Yeah. See, it could be any team this year. Any team. I'm going with Buffalo. Okay, so we're 20 minutes away from the futures market, it is still holding some support. You could take like a speculative buy. I wouldn't risk a lot. If I was testing out a buy or a sell, I would go with a small position, test it out. If you do get stopped out, it's not the end of the world. You're not risking too much. That's how I would always trade when it's trading like this. If you feel like you got to get into a trade, just go a little smaller position. So if you go and draw down a little bit, you're not panicking. You can continue to watch what's going on. If you do get stopped out, okay, you get stopped out. It's not the end of the world. You give a little bit back, but it's easily you can make it up with another move. Otherwise, just sit back, be patient. This is how you can learn how to be patient, right? you got to learn at some point how to be patient. So sometimes you're going to watch candles trading like this, and they're not doing anything, in my opinion. Guys, did you guys see Tesla broke all-time highs? Elon Musk in the new year is gonna IPO SpaceX. It's looking to IPO with a market cap evaluation of 1.5 trillion, which would be the largest IPO in the history for SpaceX. So if you're a Tesla shareholder, you know, you get a little bit of that too. So congratulations to Tesla shareholders out there that have been holding since 2019, 20, when Tesla did a stock split. You guys remember it was trading at $1,200 a share. Then they did a stock split and brought it back down. You know, there was a significant pullback earlier in this year, and it's filled it right back up and trading at all-time highs. So Tesla, guys, whether you like Elon Musk or not, you know, you gotta follow the share price of the company. You know, if you're looking to invest in anything, I want to see the first couple of weeks of when they launch SpaceX to see if there's a pullback. Maybe start getting my feet wet in that security. Yeah, Leah dropped hard after the robo-taxi event. Yeah, it was a lot of build up for the robo-taxis and then dropped after that. Ash Gowen, Lions need to get their heads out of their ass and win the next 3. Yeah, I was at the game. I was at the Cowboys-Lions game. Yeah, I'm only 90 minutes away from Ford Field. I'm like 90 minutes away from. That's why I want Buffalo to win, because it's the last year of the Ralph Wilson Stadium, because they got their brand new stadium that they're building for next year. So it'd be kind of like a good story to win the Super Bowl finally for Ralph Wilson and that stadium before they tear it down and build the new one. Well, the new one is already built, ready to go in 2026. Okay, so you see we came right back up where? Right into 50%, where we cut that bar in half, and now the sellers are continuing to push it down, okay? So we got a lower high, sellers are pushing it down, the buyers didn't advance it. So coming down now, again, now is this gonna take out the lowest point of the day down here? Are we gonna see something, or is it just gonna produce another like higher low wick and come back in? So we didn't take out the highest point of the day, got rejected, continue to push down, rotated right back up to 50%, and now you got the continuation pushing down. Let's see if this black bar can break for a new low, maybe close below these bodies, and technically see if it can break the daily low already established. And then if we go to a higher time frame to kind of clean up everything, if we go back to the hourly, we can see that the hourly candle now is coming down, closing in 15 minutes. So it came up the previous hour, hit the highest point of the day, back down. We just came up this hour, right back up there. They've pushed it right back down. So will this hourly volume continue filling that previous hourly low? And that's the lowest point of the day. And will we get hourly bearish volume starting to close below here? Maybe the futures market might open up bearish and continue pushing down, or it might be like a fake out where it comes back up bullish. You know, so these are the things that we have to watch for going into the next 15 minutes, right into 8 p.m. the futures market open up. So far, if we technically look, lower high, lower high, lower high, all at the highest point of the day. We've got lower highs there, lower highs there. We're trading in the all-time high second top zone, like when we look at the daily. So now we go back to the daily charts. So you see what's going on right now, how the daily candle looks so far. Okay, so we've been coming up in there. Now the daily candle, you see, came all the way up to that purple line and starting to get rejected. So that's why I'm watching on the lower time frames what will happen at the lowest point right here. Okay, so this is coming down. Technically, it looks like it should break with that daily volume now pushing down. Sergio, welcome. Thanks for joining. We're just watching gold, see if it will break the daily low right now. And then you guys know when it breaks, possibility it could just be a big black candle come down, catch a wick and go back up and maybe close and start a bullish move back up. Then it broke the low, came back in. We could see that. We could see it come down black and close black below there. Then maybe it might come back up to retest this and get rejected and start shooting down. Or we don't even see it breaking the low yet. Okay, it didn't come down. Now what I use is, you see, like this yellow line, it was a daily point of interest. Now we got 5-minute volume closing below it. So this yellow line could be resistance going forward if the buyers try to bring it back up here. You know, if I was to cut it in half, I would be kind of cutting it in half right in there. But also the daily point of interest is a very important area. It over exceeds these little cut lines and things like this, because this is a daily point of interest. So, but in a choppy trading volume, you can see how it's just breaking, coming back up, holding, going down, breaking. You know, in a choppy environment, it's not easy to trade this stuff, okay? But there's a little bit of volume opening up. So if we kind of just measure the size of that last bearish candle, it's approximately 30 pips, okay? So 30, we might see candles move 30, 40, 50 pips. So then you got to kind of think about, maybe if we do take a trade, how much of a stop loss are you going to give it? You should be calculating what position size, what lot size, what are you doing micros? Are you doing minis? Are you doing standard lots and forex? What are you doing? Like, you got to have some sort of plan prior to taking a trade, just in case you go into drawdown. Remember what we were talking about. How do you control your emotions when you're taking a trade and it goes against you and you go into drawdown? Well, number one is you don't want to panic when you're in the trade, because if you start panicking, then you're obviously trading with a size that's a little bit bigger than you should be trading, because you shouldn't panic. Or if you're panicking, I can tell that maybe you got inexperience, or you're maybe a beginner trader, because the more you get accustomed to trading, taking trades, you're going to go through drawdown. Every trader does, but some traders handle it a little bit better than others, right? I can tell every trader that's trading with proper risk management should not be panicking when they go into drawdown, because you've already calculated in your head how much you're willing to lose on that trade. If it's okay and you take it, then there's nothing to worry about. Also, allocating trades, okay? So like, let's just use a nice whole number. If I'm risking 1% of my entire capital right now on tonight's future session, 1% of my entire account, okay? If I lose that whole 1%, I still have 99% that I can recover, that 1%. However, do I place that whole 1% right now on one trade? So this is what I do. I allocate. If I'm going to take, let's say, 3 to 5 trades for a day, okay, this might be just one trade right now, and I might save some more trades for New York tomorrow morning. So if I'm looking to take 3 trades, 1 right now, 2 tomorrow for New York, then, and I'm only risking 1% for today, then do your math. 1% divided by 3 is 0.33%. Then I allocate on my first trade, if I do take one, 0.33%, right? And if I get stopped out, I still have like 0.66% to recover that and go back to break even and continue trading. If I get stopped out, that's strike one. If I take another trade, maybe I wake up tomorrow morning and I get into New York, I'm risking again 0.33. It's either to recover the one I lost, get back to break even. If I get stopped out, then I know I'm down 0.66%, still haven't touched my 1%. I know it's strike two. Now I got to really look for a nice clean A+ setup. I got to be very patient on my third trade. Otherwise, I could be clocked out and that's it. Then it's a losing day, but it's not a day where I'm panicking and over leveraging and revenge trading. There's a body that just closed below. You see where the cut line is? It's the purple line. So it opened bullish ignited, but this thing could just continue to advance down, okay? So do we have a retest. We don't yet, okay? So this could continue further pushing down. However, it could hold and come back up blue and we could sell a retest. So this is where you got to kind of make a determination of what you're going to do. And there's 9.5 more minutes to go and we're in the futures market. So this was the first body that's closed below since 2:45 p.m. Eastern, okay? So I'm not in a trade, but what I'm going to do is mark this zone in case it comes back up. Maybe I can sell that area at a premium, right? So I got to wait for it to naturally come up. It might not come up now. It might come up at 8 p.m., at 8:15, at 8:30. I don't know. But when it comes up there, that might be a good area to entertain a sell. If it gets rejected, then to come back down, okay? So unless you want to take a sell right now, but again, you might be selling the lowest point. You know, you got your 200 EMA there. It could bounce back up and come in. So you got to kind of make that determination. If we're waiting for a pullback, then you got to wait for a pullback. Will it be this candle? Will it be 15 minutes from now? Will it be 30 minutes from now? I don't know. I wish I could tell you when it will pull back, but sometimes you just got to sit back and wait it out, okay? And it's not a guarantee if it comes in there that it's going to go down. What happens if it just comes in here and closes above and then it starts going up blue? Then I know that they faked this lowest point of the day out, okay? So far it's a blue candle coming back, back in, but has not retested this location, okay? So remember, this purple line was the lowest point of the day. This is the first body that's closed below. So technically it should be acting as resistance. Like sellers should be now coming down, offering here if it does come back inside there, okay? So you see it did come up, it's got a lower high, and then they pushed it right back down. Still has not transacted in here. It could be consolidating down here and continuing to further push down without retesting. Holy, nice one. Dustin, you've been in a sell since 43.69. That's nice. Good for you. Those are big pips. Okay, so now we're getting a retest. And you got to also understand, if you do take a trade, you're still taking the trade with 7-8 minutes to go in the futures, and then it could go against you, right? So some traders, even if there's a retest, they still wait for the new hourly to open up, or the new session, or the new market to open up, or they wait for that exchange to open up, you know? But we are getting now retested, okay? So if we're looking for the retest, it officially touched the bottom of that red zone, did not touch the purple line, and is getting rejected right now. Closing in 1 minute and 45 seconds, we'll see the actual closing price. And it's building back up. Will it just kind of consolidate like a flag down in here? And now have a look. If you're trading Forex, have a look at your spreads now. I'm still at 1.0. I like if it cools down to 0.4, 0.5. Okay, so still, see, now it's coming in for an official retest. With 47 seconds, 45 seconds to go. So will it still stay closed bearish below here? Will it come back in and close bullish above here? Is it just consolidating down in here? Is it flagging for like a Tetris piece for one more piece, black candle to continue to push down? Very well could happen. And then we have 5 more minutes to go into the futures market. So you kind of got to make a decision. If you take, like if it presents you that Tetris piece and you're going to sell, it could just come down a little bit. Then futures opens up and it pumps right back up. So you just got to kind of go with intuition, but just trade with proper risk management. That's it. In case the scenario plays out against you, you're not risking your account, okay? So it closed right at the highest point of the candle and right back in this red zone. So, you know, and this candle open ignited, so it could still push up bullish. And maybe we wait for this 5-minute candle to close, above here or below here, then we walk into the futures. Okay, so it came and now there's the official retest. You see how it tapped the purple line and now it's getting rejected. So this is what I mean. It could come down black, black, black like a Tetris piece and break and continue dropping down. And then as soon as futures market opens up, it could continue with that pat down or they could reverse it. Okay, so if you like what you see, you can do what you want, right? But let's see if it's coming down black, black, black. Will it continue feeling that wick and start dropping down? There's that 200 EMA right there that could act as support or break and continue dropping. Our daily candle has flipped bearish, going right into this futures market in the next 4 minutes. And it's still kind of in this consolidated area. There's nothing wrong with also waiting for this body to close. You know, I'm gonna wait for it to close. I know I might be missing out on like a Tetris piece continuing to push down, but I feel more comfortable waiting for this body to close and then trade when the futures market opens up. Just in case there's some fake outs, you know, you got to be careful just in case there's some fake outs right prior to a specific hour opening up. You just got to kind of control yourself, right? And I know that I might miss out on a sell, but I also know if I sell and then it reverses right back up and is a big blue candle, I'm getting stopped out, right? So I'm weighing the pros and the cons. And then I just tell myself, just wait it out another 3 minutes and let's see what 8 p.m. does, right? You see how, like, as a trader, as a scalper, you got to kind of talk yourself into taking a trade, talk yourself out of a trade, kind of develop, you know, that it's like it's telling me sell, 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 but then it's also telling, my mind is telling me, hey, just be careful, you might get faked out, right? You guys have that, you know, that voice in your head. That's who you're battling every single day when you're trading. Well, I'm not against the market makers. I'm not against the brokers. Like we said, the markets are going to move regardless, whether like it's moving right now. It faked out the sellers currently right now. I'm not even in. So it's going to move when you're in a trade or not in a trade. You are trading against yourself every single day. You got to kind of talk yourself out of an impulse trade, talk yourself into being disciplined, right? Not a lot of traders talk about that shit, but do you guys not have a voice going through your head when you're trading? Like thinking about, like I was just walking you through my psychology. I was thinking of selling that and now I held off. Maybe I made the right decision. Maybe it could have just been breaking down and then I made the wrong decision. So you got to kind of go with what the market presents you, make a decision, whether you buy or sell, but just use proper risk management backing it up. That's it. If you get stopped out, all traders get stopped out, okay? All these sellers right now, they were selling. Now it's reversing back on them. Now maybe the market will close above here and move away from them, bullish direction, and make them think about their stop losses and things like that, and maybe squeeze them into further drawdown. However, it could just be faking out these buyers now, and then they drop it right when the futures market opens up again. Okay, but we're still right below the red zone. We're still in this consolidated zone. Now they're bringing it down with 1 more minute to go. Now it's getting interesting. Now get ready, okay? Because this now volume could go down. The momentum could continue selling down. And then I see that they trap some buyers up there again. And it's still holding below the red zone. You know, it's still barcoding bearish, bullish, bearish. And it could continue going down. There could be a quick fake out move. Let's see what happens. But if we're going with like the flow of the market right there, lower low came up, lower highs, new lower low could come and continue breaking down. Okay. And we got 20 seconds to go into the close. Let's see what happens. And guys, I'm going to be with you guys for the next 30 minutes and then I got to wrap it up at 8:30. Okay. So here we go. And this is the futures market open 8 p.m. Eastern every single day, Monday, Tuesday, Wednesday, and Thursday. Okay, there it closed. Okay, open bearish ignited, coming down. Will it continue coming down, coming down, coming down? Caught a wick, another push down, Got a wick coming back up. Will it, remember, it was ignited bearish when it opened up. Will they flip it up blue? Okay, so it flipped. And now you see, okay, it's still fighting inside here, coming up blue, going back down black. We're still in this consolidated zone. Yeah, it's kind of up and down in here. Now turn nice and bullish. Again, it could be an impulse break. Will the blue candle close above here so that we can flip this red zone green and build off of it? Okay, maybe we found a bottom. You could go in a buy on this, but again, it could be an impulse break and then get a wick and it comes right back down, right? This is the first 40 seconds of this candle. So you can talk yourself into waiting for it to close. It spiked out of their impulse, got rejected back down. It's game time. You just got to be a little bit disciplined. And even if it comes up here blue, we can watch where it closes. Maybe we can catch a pullback. Maybe it just comes up here and goes back down, and then it's black down in here near the close. Okay, but you can see how they faked out those sellers down there. So when I talked myself out of selling that Tetris piece, I did a good job on that. So anytime you do like a good job in trading, you talked yourself out of some drawdown, make sure you kind of make a mental note of that in your head, okay? Because you just did something good in trading. You were very disciplined to not take that sell. Because if you did, you would be currently in drawdown right now. And again, this candle is kind of frustrating sellers and buyers coming up, down, up, down. I'm going to wait for the final bar to close in 3 minutes. Where will it close? Above here. Will it close above that daily point of interest? Will this be a big blue candle coming all the way back up here? Then I'll cut it in half. I'll determine the point of control of this candle. Will it close above this? Will it engulf this big bearish body? Like there's a lot of things to consider in this. And again, it's coming up. Did not take out that high, got a lower high, and they're pushing it right back down. Salon, you did sell and you lost 90 bucks. It happens. It happens. Hopefully $90 is not a lot, you know, like you manage your risk, but it happens, guys. Okay. There's lots of traders that lose. Okay. Now look at big spike now. Now like intuition. Now maybe we sell and we go down with this market. Okay. Now it's coming down. It broke a new low. It's coming back up now. Maybe we sell down with the volume if there's one more push to the downside. Okay. So we see that they spiked it up there. Okay. I'm going to go in a sell now. I'm in a sell. I want to see if this volume can continue to push down. So my stop loss, at least minimum above the wick of this candle. Okay. That's not out of the ordinary. That's not crazy. But since I'm close to that daily point of interest, yellow line, the opening balance, maybe I just keep my stop loss a tad above the opening balance. I could, even if I want more room to breathe, about 50% of that bearish candle right there. And my target would be to come down and fill this entire red zone, get down to that daily point of interest, yellow line, 4,326 down in there, okay? So let's see now. This candle's closing in 90 seconds. Let's see, it's pushing down, okay? It's in 30 pips of profit right now, okay? You know, normally I pip and dip, but on these, I don't know what I'm doing on these live calls with you guys because this is completely going against the way how I trade. But I'll see what happens here. So I want to see if now it can break down. So you see how I went with the intuition of how that thing was breaking down, and I went right into profit with zero drawdown. That's scalping, right? I saw the liquidity wick, saw the way they brought it down, saw it cut a wick on the way up, and then I went back down with the next volume pushing down. So now let's see if we can close below here. Cutting it in half would be my entry point, and see if we can get it down to that zone for about 50, 60 pips down there, okay? I have not controlled my risk as of yet, okay? And again, remember my mistake yesterday? I went in 40 pips of profit and I never closed out anything. So is Ron making another critical mistake tonight? Don't be dumb like Ron. You guys do what you guys got to do here, okay? Unc needs to manage this in the next 20 seconds. And remember, if we close near the low, we might get one more ignited bar, continuing to push down. Get your cut line ready. Here's 5, 6, 7, 5, 4, 3, 2, 1. Close. Cutting it in half is basically my entry point right there. So it opened bullish ignited. So it could come all the way up blue. Okay, but we have a 200 EMA as resistance. We have a cut line 50% where I entered, and we do have a short wick. So if we can flip this candle back down to the opening balance, we could break, fill that wick, and start dropping for a new lower low. And then measuring the move, perfect, that's the candle we want. Then it will turn into 35, possibly 40, 50 pips down in there. Okay, so now I'm going down to a break even. Now I'm at a break even. Now I have zero risk. Okay, zero risk. I'm okay emotionally now, mentally. Now it's dropping again. 40 pips. Is this going to be what am I getting greedy looking for that break again at 40 pips? And is Ron going to get burned again on this call? But worst case scenarios, I have no stop loss. I have no capital at risk. Okay. So Frank, you secured 80%. Good. Okay. But let's see if we got a nice daily bar beside us. Oh man, just if we can tag that daily position right down there, 4326. Looking to the left of the chart, see what we're feeling? Wick, wick, wick. So these wicks right over here. I'd like to target, okay, we did. We targeted those bodies right in there. And that was that 41 pips right into there. So, you know, I'm okay being at a break even. Red zone right there. Continuing to push down. If we can get black volume closing below this red line, maybe we can make this ongoing resistance for that one more push down. And we've got 3 minutes, a lot of time left on this candle. So half the candle is exhausted. It's a 5-minute candle. 2.5 minutes have expired. Okay. So now we're going in the second half of the football game. Halftime show, the cheerleaders dance, and now it's the second half. Who is going to win? Right? I'm hoping that the sellers can continue bidding it down, but there could be buyers that rotate it right back up. Maybe I went too quickly to a break even, and I could get tagged out at break even. I don't win, I don't lose. It goes against me as another scratch. And then the markets are telling me when it goes down to 40 pips, third time is a charm. I better start closing out 80% at 40 pips. And then there you again, back-to-back days, I literally have maybe possibly pissed away 40 pips in profit. So I don't know why I trade like this when I'm live on YouTube. I do it so naturally when I'm trading by myself, but I know a lot of traders think I'm just talking points and bullshitting. It's all good. Now I got to continue watching it. Got a good wick at that 200 EMA. Can we continue push down, close below this opening balance? If it comes back up, break even, and it gets another leg down, I could possibly sell down with the next leg. Okay, I'll verbally let you guys know as soon as I get tapped out. I have a little different position than what you see on this chart. I trade off of Fusion Markets, so it's a little different. So I'm still in. I have not been tapped out. We've got 1 minute going into the close. So now you see I officially retested the bottom of that red zone that I've established right there, the point of control. So we got a good wick there. We got good offers. We got a spin top candle. Can we just continue to bid it down, close it black, and maybe we'll have one more black candle pushing down and really flush this move down. I would love that because I know I made a mistake not taking out. So will the Forex gods be there? So there's another wick there. 30 seconds to go. I'm still in it. I'll verbally let you guys know as soon as I get tapped out. And then you guys know the principles of pipping and dipping out of these markets. Because shit like this can happen. And that was more than 5 cents per hour. Yeah. That was worth like a year's worth of streaming here. That okay. So it closed strong. It's bullish open. It's testing back that wick. There is a rejection there, but it's still got that bullish, strong, ignited candle. Holding, building. We flip the candle. So we flipped it. That's positive. Now, can we get like a 3-bar play down here? Black, blue, and one more black bar coming back down and breaking down. And this is where the 9 EMA is creeping back down to the 200. I'll no longer be in the trade, but this is where you could get a possible bearish crossover. For you guys that have a stop loss, you know, not as tight as mine, you didn't go to a break even, you're still live, right? So, but still we got good black volume coming down. Man, this would be an incredible 3-bar play breaking down here. Still holding at this point of control. Barcoding on the 1 minute, yeah. So the battle is at 4-3-3-2 right now. Lots of buying, lots of selling. Sellers are still there holding it down. Good bearish candle coming down. Man, I would love to break these bodies and flood this down. At least secure something now. I'm stubborn like that. I want to come down and hit this red line. Maybe it's me being just stubborn here. Okay, maybe this is the attempt now. One more big bearish push. Let's go. Really come down and take these lows out. Man, how much can we consolidate in here? Right there. There's a good push. There it is. Okay. Okay. So again, now let's see if we can fill, maybe close with black volume below these bodies and get that further push down. So I've escaped that so far by a hair, you can see. But now we need closing. We need a strong close. Halftime show again on this candle. It's now the second half. Man. I hate when the markets move like this. That's why I like trading New York, when there's nice big moves and it makes your decision real quick. This is, oh man. But maybe, hopefully I get rewarded for being patient here. Let's see. There's a good push. Okay, so I'm going to secure 80% right there. I don't want, there's the break. Okay, so I got 80% out. I got 20% running. So I closed out 80% on that push down. Oh man, whoo! There, I made a yearly wage on YouTube, more than 5 cents per hour right there. I made a whole $2. I made a daily wage on YouTube right there. Okay, so now I got 20% at break even, secured 80% down there. Total target goal would be, you know, to that daily point of interest. If we get volume, we got lower lows, lower highs. Guys, you see how that candle, like I'll break this down in just a moment. Let's figure out where this thing closes. But kids can eat now. Yep, no more Kraft dinner and cans of tuna for my kids. Now we can upgrade to McDonald's tonight. Yeah, we splurged with the Subway today. So guys, hit the likes on YouTube, put a W in the chat, you know, and we grab some pips, hopefully. We learned something. I hope we learned something today. And let's see if we can continue. But guys, like there's a lot to review, you know, like we waited patiently, but that bar, when it came, you know, futures market spiked, blue. Remember I said waited, then it came down, then it went back in, and I went in on that candle. So it was kind of like I took an impulse prior to it closing, but I waited for that specific candle to open and see what it was doing. Okay. So, you know, you got to have a little bit of intuition too when you're trading. That's why reading candles individually, one by one, tells you a story, if you know what you're looking for, okay? And now I review it. Yes, maybe I went to a break even too fast, I got saved at that point of control, but I was okay with going to the break even, right? I'm a different trader. Like I can, if I have no capital at risk, then I have a risk-free trade basically. Okay, so it came in again, strong, where to 50% of that candle now, that bearish one. So I'm still invested. I still have a runner in it. Obviously, I want the runner to maximize the move all the way down there if it can get there. But, you know, I got to continue to watch what's going on. That is a lower high rejected at 50% of that black candle right there. Can we continue bidding down? This is a strong candle opening. And then we got a consolidated box. Regardless, I'm happy that I took out 80% on that candle dropping down. So now whatever happens with the runner, I hope this thing runs all night down here and then gold bleeds. Then I got a runner. But the worst case is it comes back up, stops me out of my runner, 20% at break even. But I'm happy now that I secured 80% on that drop, right? So that's the way how I look at trading. Mira, good day from all the way from Czechia. Welcome. I've been to Prague. It's beautiful. Did you guys do anything? Can I ask? Or are you guys still holding a sell? Are you at a break even? Do you still have a stop loss in the market? Did you scale out? What is your plan? You did with me? Good. Still holding 30%, Rob? Nice. Frank, you got the 20% running. Excellent. Guys, remember, just get some money out of these markets. Continue to compound these accounts. Some days are going to be better than other days, but look at that. We got a beautiful rejection. We got now a shooting star candle. That's what we want. So now can we just continue filling and dropping down? So look how many buyers got trapped in that wick right there. That's perfect. So now we just got to redistribute, fill this wick. This candle has to do its job, break for that new low, and continue to advance down. But this is a critical daily point of interest. This is the bottom of our red zone, and that would be a total of 60 to 70 pips down in there if it gets down there. And you can see where it was trading today, earlier, noon. That was when it came down at noon. It went right back up. Then it came down right there at 140, 145, 150. So look at what we're doing. We're kind of retracing all the way. See where that wick got stopped right there? Sorry, I didn't do this ahead of time. That's where I was securing that 80%. But when you look at it now, that wick, previous 5-minute candle, is exactly lined up with noon. So you can see how these buyers who bought right there at 1140 are still holding the market right there, and that wick right there. And they're protecting this daily point of interest right now. So one more push down. Here it is. Boom. Guys, if you don't mind, I'm going to close my entire trade right there. Take out that 20%. That met my target right there. Regardless if it taps into that yellow line or not, I'm securing the entire position right there. I'm happy. Excellent. Okay, because I respect this area. Sometimes I get really greedy on these calls where it comes down, and by 1 or 2 ticks, then it reverses back on me. So don't want to make that mistake right now. So I am completely out of this trade. 80% was taken out on that candle, left the 20% running at break even, and maximize the runner all the way down there. And yes, I can hold this as long as I want, but I'm happy. I'm content there. Whether it continues to push down, that's fine. But right there, I hit my Tokyo session goal. Good job, Frank. Have a great night, brother. Thank you for joining. Enjoy the pips, my man. And then if you're still in the trade or you're looking for another trade, you got to follow the volume. Where will this one close? Below this red line, will it close there, then has one more push to take out this daily point of interest? Then that's where maybe the buyers could reverse it back up. Chris, amazing. You're out 90 pips. Amazing. Shay, my man, good job, brother. Awesome, guys. Awesome. I'm just happy that we controlled our risk. I'm happy that I never got tapped out at that break even on those two candles because it got real close. And happy we got a profitable trade, guys. And I'm happy I made more than 15 cents. Or no, this is what, a 2-hour call? 10 cents. YouTube pays me 10 cents for these 2 hours. Slave labor, 5 cents per hour. Oh, Chris, you're off to the butchers. My man, what are you getting? Talk to me now. I love going to the butchers myself. Is the best part of my day. Yeah, I can't even buy a coffee. I can't. Coffee is $2. I got to stream for 2 weeks to buy a coffee. Aussie roast. Oh, nice, Chris. So this trade is closed. Complete. You know when we stamp the meat right here? That trade is closed. But if you're in, you could be targeting that yellow line. If it breaks the top of the green zone, 4324, 4325, right? If you're looking for a solid buy, put an alert right down in here at 4320. Maybe it will push down there later tonight, and that would be an excellent area to buy and bring it right back up. If it makes its way down there, it might not, right? See those equal lows now held at this daily point of interest? That's why, guys, I said I'm happy taking out that entire position there, because sometimes I wait, I get stubborn for it to hit exactly that line. I've been burned by a few ticks on these calls too. So you got to kind of just go with the flow. And that meant my requirements, 60 pips. Boom, boom, boom. Bada boom, bada bing. Rob, you're all out. Good for you, boss. Took trades by yourself today using the cutter. 7th day green. Guys, YouTube, read my man Rob Mason 1. All out 2. Nice trade. Took trades by myself today using the cut rule. 7th day green. Congratulations. Simple trading. Just cut it. Go over here, guys, to YouTube. Put in your music of choice over here. Go to cut it, okay, and put in OT Genesis and Young Dolph and listen to the song Cut It. That should be your theme song. Ferris, you lose your money. Despite that, my analysis is good and all trades reach my target, but I close the trade quickly. I need your advice. Just, there's no advice. It's let your trades play out. If you're seeing that they're hitting your targets like that, see how I held that trade, you know, just try. If you're not over leveraged, hold the trades, especially if you're seeing that they're hitting your targets. Just let them go naturally to where they got to go, and just try it tomorrow, right? And see. But there's like that would, if I was still in, I would be targeting that yellow line. Okay. That's just me. But if you're still in, guys, if you're still running runners or you're still in, the top of the green zone is another target, right? You guys got to know why we developed that green zone, where that zone came from. And then that would be a total of 90 pips to push down there. 50 seconds, okay? It could close below that yellow line, and it could continue to make that yellow line resistance and have one more push down. But right now, spike that, and this is where maybe going into 8:30, we could see maybe a reversal coming back up blue. But you got to understand, if you're buying, you're counter trading this trend. So it could trade right back to where I entered, and that could be the resistance, right? It could come all the way back up, right up to there, and go all the way right back down, right? So if you want to continue to trade tonight, I'm going to place, like if I'm going to go watch some sports and come back, but I'm creating an alert where I originally entered. So if it comes back in there, maybe I could continue to sell off there. I'm going to place an alert right here. Maybe if it comes tumbling down, I might look to buy at 4320 and take it back up a little bit. So I'm adding an alert. And when I walk away from the computer, I can still get alerts. And now I know at least my alerts are at high probable setup areas, not just trading any candle. So that, look at that bar, close below, right near the low, it came back up. So you see the yellow line is now resistance, and it could continue to come tumbling down right down to there. So look at it. That's why, guys, you don't want to just buy against the trend because you're in severe drawdown. So you want to wait for buys at specific locations, right? Now it broke. Will it come back in? Will it do something like this? Break, come back in, retest this, then maybe buy it. But then this is resistance. You know, that red line is resistance. And then that total block up there is where the big futures candle opened, and that's where all the sellers were. And it could come and do something like that, right? Use your arrow, your pathway. Like what I used to do when I was learning how to trade was this is exactly. I would do it like this, and I'd walk away from the computer. I'd come back 2 hours later, and I couldn't believe my eyes. The candles kind of followed my path. That's how I learned, right? You know, back testing is nice to go back and look, but what if you do your pathway in the future and then you come back 2 hours later, you go have supper, you come back, you go to the butcher, you get some nice steaks, you grill them, you eat, you come back, and then you kind of look, it's verification. Then if you see, oh my God, it came up there, it tapped that, it rejected down, it came to my daily point of interest, it bought out of there, then you're kind of strengthening your own analysis. Yes, I know you're not in the trade, but this is, I'm telling myself, if it comes back up there, I'm looking to sell there. If it comes down there, I'm looking to buy there. I could now follow these arrows for the rest of the night. I can go to sleep, wake up tomorrow morning, and see if it officially hit these levels and respected these levels. If it does, that's how I know that my style of trading is still working, right? Still respecting our analysis. My man, that's what it's called, Shay. I thank you for forward testing. Perfect. So you see how you guys help me too? I just do these things. They're not called strategies or names or this or that. This is just how I learned how to do this shit over time. You know, do a forward analysis. And if you're not going to trade the rest of the night, at least do that. How long did it take me? It took me 2 minutes to do that. And when you wake up tomorrow morning, verify it and then clean your charts and start fresh, right? Okay, guys, I love you guys. That's it. It's 8:30. I got to take off. I got to go do a few things. We came, we pipped, we dipped, we grabbed some pips out of the market. Join Dave tomorrow morning for tomorrow's like basically our final day trading Thursday. Dave has got New York session. Guys, Dave killed it with the snipers over here, our free Telegram channel. Right over here. Here was Dave with the snipers. Trading inside here. Great job by the snipers and Dave, New York. If you want to trade, guys, and join the Discord, join. And then tomorrow, guys, will be our final session this week. Again, Tokyo, 6:30, same time. We'll do the same schedule, 2 hours. I'll make another 10 cents on YouTube. Hopefully, I'll make more trading. And then we'll upload the Psychology and Mindset Webinar 1 of 25 to come. So it's pre-recorded. It's 47 minutes. I recorded it yesterday for you guys. I'm sure that you guys will enjoy it. And it's good review for the weekend to get your mindset set for going into the next week. Okay, guys? And thanks everyone that joined us on YouTube. We respect you guys. There is a couple of clowns on YouTube once in a while. It's okay. We're going to encounter that, but 99% of you guys are all good in my books. You guys are here for the right reasons. We do get some haters on here because they hate us because they ain't us. You know, we're often imitated, but we're never duplicated. I'm sorry to tell you guys that. We're here 6 years running, every single day live, showing you live trades, analysis, breakdowns. We're making 10 cents per session and we're loving life. So thank you guys. I hope you guys are learning too, the art and the skill of trading the markets. And I know that we're going to have a big 2026 year coming. So just trade smart the next few weeks finishing off this year. Don't trade stupid. Don't over leverage, because if you ruin the end of the year, guess what? This is how you're going to start the first brand new year. You're going to start off on the wrong foot. So if you've done really well, wrap it up, guys. Have a good night, guys, and we'll see you guys tomorrow, okay? And do a forward analysis. If you're going to go to sleep, do something like me, and then verify it tomorrow morning, and that's how you'll learn too at your levels. Is your top-down analysis respecting these levels? And then you can also learn there. Maybe it doesn't come exactly down to the yellow line and bounce off, but what you're going to see are those options I talk about. You might see it come down there, do a double bottom, then you'll see that, then you'll learn from it. You might see that it fakes out. It comes down there, it's a wick closing above, then a push up. You'll learn from that, remember? Or option 3, it's still bearish, sellers close below, it retests that, and it's continuing to sell. But you'll get a market move at that daily point of interest. It will be one of these 3 options. That's it. And a process of elimination. If it's not this, if it's not that, it's got to be this. If it's not this, if it's not that, it's got to be that, right? Those are the 3 directions that the market can move. That's it. Process of elimination. Start eliminating. It didn't do this, it's doing this. What is the implications of what can happen? And over time, you're going to start to see the same shit over and over. Let me just quickly review the trade so you guys know what happened here. Okay, so you remember it was trading inside here. We relaxed. We didn't take that buy up there. It didn't break the highs. Came back down right here at this daily position, yellow line. See how it bounced back up right there where I cut my candle. I saw 50%. It came back down. There it was. Now look at the time, 740. I didn't sell that. Here, I could have sold that. I didn't. I waited. 745. I see it broke and closed below. Remember, this one was coming. I was thinking about selling that and I held off. And then it came right back up, 750. This one was bearish, bearish, bearish. Again, I waited because it was 5 minutes before futures. It came back up. Next candle, here's futures. Open bullish, bullish, bullish. Remember, I said, guys, I don't want, maybe it's going to be a fake out blue candle. That was a really blue candle. It trapped a lot of buyers, but it didn't even break that previous high wick, and we're still below the daily yellow line. And then I saw as soon as it got rejected, that was a big rejection, and it came down bearish and broke. I didn't take it. Then it came right back up. And then that next pump down, I took it on impulse prior to closing. That's where I entered the sell. I told you guys I placed my stop loss above this wick, but I put it a little bit since we're very close to the daily point of interest. I just put it above there. My target, remember, was originally the yellow line down in here. And then as it pushed down that first move, it was up 40 pips. I didn't do anything. But what I did on that drop was I took my stop loss to break even. Maybe it was too aggressive going to break even. I could have reduced it from the yellow line and just been maybe at the opening of that bearish candle, maybe safe in there. But, you know, I'm showing you guys the point of control, how the zone, this red zone held up. And there was that inside blue bar. They closed it. Again, it reattempted the equal highs. Then we got that bearish Tetris piece, break a new low. Close, it came up blue, blue, blue. See, right, like about 50%, just a little higher, lower high, and really bleed it out. Then on that candle pushing down, I took out 80%. And when we started coming down right there, yes, I missed out on a few extra pips, but that's a full breakdown, okay, of a live trade, no BS, no after the fact. You should have done this, you could have done that, the woulda, shoulda, couldas. It is what it is, okay? And the only thing that I can critique myself on was I went too quickly to a break even because it could have came up, tapped me out, break even, and I miss out on this move. So maybe I should have just lowered my risk and placed my stop loss maybe at the opening of this body or just above the purple line, just in case it came up a little higher and then they rejected it back down, okay? But that's how you learn. That's how you continuously learn from trading. And you see right there, did it come right down almost to the top of that green box? And then this is where you got a blue candle now coming up. Where will it close? I will wait to see, you know, if I was still trading, can it continue to make just one higher high? Because this is a lower high, lower high, lower high. So even if it's a bull candle and they continue with a lower high and exhaust this, it's still sellers are in control. So you got to see one higher high print. Maybe this will be the candle that breaks out for the higher high and then officially close above here. Then we see where the buyers are coming in at the top of the green box. Maybe we'll build a double bottom. Then you catch that second leg coming right back up. And then you got to break above this red line, that red line, finally the big zone up there, okay? But my stuff is done here, guys. Thank you guys so much. Like and subscribe. We appreciate it, guys, and have a good night, and we'll see you guys tomorrow. Take it easy, guys. Careful trading tomorrow. Trade with proper risk management. It is the Thursday of, again, just double check your news for the Thursday. I believe we got some news tomorrow. What do we got? Wednesday, December 17. Thursday. Sorry, guys. Let me just go into Thursday here. There we go. Lots of news tomorrow. Okay. Starts 7 a.m. Lot of UK British news coming out. They got their monetary policy. Lots of European news tomorrow. So if you're trading the euro or the pounds, it's gonna. If you're trading currency tomorrow, it's gonna be aggressive. Tomorrow we got the CPI year over year. Holy shit! Inflation data being released tomorrow at 8:30. Donald Trump says we're in an A++ economy. Let's see what the CPI year over year says. We have our weekly unemployment claims coming out tomorrow. Philly Fed manufacturing index coming out, and then the ECB press conference with the euro. And so tomorrow, careful guys. Got some high impact news. Okay. Have a fantastic night, guys. Good night. See you guys tomorrow. Thanks, guys. Have a good night. Thanks, everyone. Enjoy the night. Shay, have a good night. Lillian, have a good night. Lee, my man, have a good night. Justin, enjoy, brother. Chris, save me some beef. Get me some lamb. Get me some nice lamb chops for the barbecue. I'd appreciate that. Have a good day, guys. Sergio, take it easy, brother. Cheers. Hopefully you're still drinking the eggnog. When move? I don't know. I don't know. That's a great
Recording stopped.
Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.